Aboath from the Aboath Real Estate Group. In today's video, we're going to be going over the different cycles of the real estate market. Now, there are three main market types: a seller's market, a buyer's market, and a balanced market. We often hear these terms being thrown around, but what exactly do they mean? So let's start off with a seller's market. Now, this is a type of market that benefits and favors the seller. It is characterized by a low inventory or a shortage of homes, combined with more potential home buyers than there are homes available. Essentially, there is more demand than there is supply of homes. Now, this often results in buyers competing with each other, rising house prices, and properties selling faster than usual on the market. Due to the increased competition, there are several things that can affect you if you are a buyer in a seller's market. So, number one, you may have to pay a price that's higher than usual for the house. Number two, you will have to likely make your best offer first, leaving you with little or no room for negotiation. And number three, you may have to buy the property in either as-is condition, or you may have to make an unconditional offer to get an edge on the competition. Ultimately, it is quite typical for a seller to get a price that's higher than what they listed their property for in a seller's market. The second type of market is actually a buyer's market. Now, in this type of market, the opposite is true. What I mean by that is supply actually exceeds demands for homes. Because of this, this market is characterized by a high inventory or surplus of homes available, combined with a shortage of interested home buyers. As a result, buyers have a lot more leverage and room for negotiation when purchasing a property. Property prices often decrease, they take longer to sell, and sellers actually have to compete with other sellers to attract interested buyers. In a buyer's market, there are several things that can occur. Sellers may accept a reduced price to get an edge on their competition. Buyers may include many conditions in their offer, and sellers are actually more willing to negotiate with buyers to prevent them from walking away. Ultimately, this is a market type that favors the buyer, and it gives them a lot more time to do their due diligence when searching for a home. Now, the third type of market is actually called a balanced market. As the name suggests, this is a market where supply equals demands for homes in an area. In this type of market, sellers will accept a reasonable price for their home, and homes will actually sell within a reasonable period of time. So, how can you tell what type of market you're in currently? It's not always easy to figure out because, especially in a city as large as Toronto, different areas and neighborhoods can be experiencing different trends at any given time. However, you can still figure out what type of market you're in by looking at three main factors. Number one, inventory in an area compared to average inventory. Number two, how many days are homes remaining on the market before they're sold? And number three, the sale prices of recently sold homes. By looking at these three factors and comparing them to average trends, you'll get a good idea of what type of market you're in currently. Now, in the next video, we're actually going to be discussing key tips and pointers on how to buy in a seller's market, so please stay tuned for that video. As always, if you have any questions or if you'd like to know more, please reach out. Thank you so much for watching. See you again next time.